changed, you know, like 0.1, 0.2, 0.3, 0.4 points in a split second. And I don't even understand it. I've been trying to learn, why does it change in that split second? You know, when the market closes for a session, there's a huge spread jump. These are simple concepts that you have to understand as a trader, and you have to accept. You are a small fish in a big pond, and you have to accept all these little nuances, that maybe your trade's not going to close at the price that you want, that your stop's going to get hit with a spread jump. It has nothing to do with the brokerage. It's institutions and their movements and what they're doing. And it's also too where you place your stops. If you place your stops right in a price zone, expect them to get hit, because there's spikes. Institutions are always trying to get the best price, and they're always trying to make sure that they are winning the most. So you have to accept that as a retail trader. And if you're practicing risk management and you're focused on your daily goal or your weekly goal, these things are just normal occurrences. I mean, I can give a perfect example. The other day, I took a trade with the pound JPY, and you know, it looked like we were going up to, I think it was 152.600, and we were at 152.500 or something like that. And I took a trade, I took an entry, and literally in like 30 seconds, it dropped like 9 pips. So, am I supposed to be upset about that? Am I supposed to turn around and you know, be angry? No, I had an idea that we were moving up to that level, which we eventually did about an hour later. But you know what? The market decided at that point that we were moving back down to get a premium price level, and I got caught. My risk management was okay, so I closed the trade, I take a loss, I look again for the next time and look for another trade. A lot of people, you know, when they see those kind of instances, they get frustrated. I look at it as, well, you know, I had the idea, I had what I wanted to do, it didn't go my way, but in probability, in understanding the context of trading, how many times is it going to go right for me? And I know more than likely it's going to be right. And I looked an hour later, and it hit my price, my take profit point. So lesson learned. You know what? Maybe I should have put a pending order a little bit higher, or maybe I shouldn't have even traded at that point. So you know what? I make a note on my journal and I carry on. And that's what you'll have to do. You have to become numb to the fact that the market's going to do shit you're not going to like. And you know what? Accept it, make notes about it, and just carry on. You know, and really understanding what Forex trading is. And like I said, it's financial gambling. I think this is the funniest thing when people used to tell me about, I play poker and I'm gambling at the casino. What am I doing? Well, you're doing the same thing in a market where people have unlimited bankrolls. You don't know who the big players are. You don't know what they're thinking. You don't know what they're doing, and you're trying to make a bit of money. It's all based on probability. It's all based on how many times over the next 100 trades is this kind of idea going to work for me? And that's what backtesting is. When people start asking me about backtesting, or they start talking about how do you become profitable, it's understanding that you're going to look for the same idea over and over again, various permutations of that idea, and permutation, the word being different instances, right? So if we're looking for the Asian Open or the New York Open, and we say to ourselves, okay, I want to trade at that particular point. Sometimes that trade will not happen at that particular open. Maybe that trade happens an hour before, maybe it happens an hour after, but the idea is similar. I'm looking for a breakout. I'm looking for a continuation. I'm looking for a reversal. It's the same idea, but you have to be able to apply it in various instances that may not happen at the exact same time. Because people turn around and say, well, you know, Asian Open today was boring. Well, yeah, but an hour before that, we had the move. Where were you? Oh, I was waiting for Asian Open, because that's when the market opens. Right, but you as a trader have to understand that you're not going to see the exact same thing at the exact same specific time. It's going to be a variation of that, and you have to apply your knowledge to ensure that you are making a proper decision. So let's talk about the basics. similar to what I was saying before, you have no control on the outcome of your trades. I know you want to pray and wish that the market moves in a certain direction, but you have no control. The only thing you can control is your risk management, and that is going to be your best friend. And if I can tell you one thing, the people who fail in Forex are the people that over leverage their account, they have poor risk management, and they don't know how to control themselves. Those are the losing traders in Forex. The winning traders take their time, grab their little bits, and that's it. You know, when we look at probability and we start talking about probability, is, you know, no matter how right you think you are, the outcome can still be wrong. You can still have a stop hunt. You can still have them trade go the opposite way. No matter everything that's pointing to that direction, you could still have it work out not in your favor. You have to accept those opportunities, or sorry, you have to accept those consequences when you're accepting the opportunity to take a trade. Getting rich overnight doesn't happen in Forex. It's a grind. If you think you want to get rich, play the lottery. That's how you're going to get rich overnight. Forex is not something that is going to make you rich overnight. You are not a professional. You are not you do not have enough information at your hands, even through education, through mentorship, through everything, to say that this is what I'm going to be able to do. I mean, I have 13 years of experience in the industry, and I traded for 3 years, and I'm still not a professional trader. I'm good at what I do because I recognize patterns. I recognize reoccurring themes. I recognize scenarios that I've seen before, so I can adapt and adjust. That's what you have to do as a trader. Do I still have losing trades? Of course I do. Everyone has losing trades. It's a part of what it is, but it's understanding why you take those losses and making sure that those losses don't happen again. Or if they do, you know when to minimize those losses. It's been, you know, countless times when we've looked at a trade and we can all sit there and say, okay, this is not going to end well. It's time to exit. And you know what? A lot of times when you exit, you're like, oh, thank God I exited. It didn't go my way anyways. And a lot of times what will happen is you exit early and then all of a sudden the trade just takes off and you're like, oh, I wish I would have held. You have to be just conscious of the decision that you make at that specific time with the information that you have at that specific time. You can't go back and say, well, I wish I would have done something. No, at that specific time, this is what the markets were telling you. This is what the markets were giving you. And that is what you made or based your decision on at that time. There's nothing wrong with that. And that's another key as you start trading, is understanding that it's okay to close trades early. It's okay to, you know, before it hits your stop loss, to close the trade. There's nothing wrong with those ideas. The problem is when you start harboring, or you start, you know, what's the word, like you start second guessing yourself or dwelling on those ideas, that creates a bigger problem in your head, because now you're always going to be worried about what you just did. Each trade is independent of the previous trade. You have to remember that. It's like when I play poker, if I lose a poker hand, I can have a pair of aces and I can lose that hand. The next time when I come to the table and I get a pair of aces, I'm not going to be thinking about why I lost that previous hand, because this is a new hand. This is new people at the table, new dynamics, new day. Everything is different than the previous scenario. It's the same principles that apply with Forex. Forex is a long-term game. You have to be able to understand that each trade is independent of the previous one. And if you can't control that, when you start trading, take one trade a day, call it a day. Whether it's a win or a loss, just stop. Because you're not at the mental mindset to say, hey, I just took a loss, I'm okay, I'm going to carry forward and I'm going to take the other trade. Or I'm not in the right mindset to turn around and say, hey, this isn't going to work for me at this point. So how do I succeed in Forex? You know, you join an education group, so you're here at the Signs, you know, you're going to be working with a whole bunch of people. Ask a lot of questions, read, practice, you know, experiment. These are all various elements that you'd want to work through, and that will help you progress. You know, how do I fail? This is the biggest thing. When I hear people talk to me about how they haven't progressed, these are some of the key things that people have done. They sit by themselves and they sit, you know, they turn on a bunch of webinars, they read books, they do all this analysis all by themselves. And they think that they're going to sit there, they're going to absorb it by osmosis, they're going to have it come into their head, and they're going to be able to do this. Or they turn around and say to me, Ted, I just watched every single webinar. And I said, you just wasted like 72 hours of your time. The idea behind reading or watching webinars or reviewing documents or things like that is for you to scan the information, go through it, and pick out points that relate to how you're trading. Because not everything in every book is going to be beneficial for you. So someone who says, you know, Ted, how many books did you read? And I say, I read about 15 to 18 books. And they're like, oh, wow, you must have a lot of information. No, because I wasn't reading every book page for page. I was skimming the books. I had a list of information that I was looking for, and I was looking for that information in those books. I was taking bits and pieces of those various books and formulating my own ideas. It's the same thing when you watch this webinar. Maybe there's key points in this webinar you already know, and you're like, well, you know, Ted, you're talking out of your ass. I don't need to listen to this section. But then there's other parts you're like, hey, I didn't know that. That's something that I can apply to what I'm doing, or that was a missing link to what I've been doing. This is how you study. This is how you progress. This is how you become a trader. You don't sit there and read 20 books and say, okay, I know everything about price action. That's fine. That's not the point of studying. You're not taking a test. Nobody's going to ask you, what does an engulfing pattern look like? Nobody's going to write that on a piece of paper. You're not going to make money by knowing on a piece of paper what that looks like. You have to understand how that relates to the market and what it's doing in the market, and how you're going to be profitable, or how you're going to be able to minimize or preserve your capital. That is what you're doing. You're taking information and you're applying it. Similar to when you do math. If you're in a math class, you look in the back of the book, the answer is so easy. Oh, I knew that answer. Oh man, you know, 2 plus 2, 4. Oh man, you know what? I knew that. And then as soon as someone turns around and says, what's 200 plus 200? Now you're sitting there and saying to yourself, oh, well, you know, like nobody told me about this question. How am I supposed to do this? I don't know how to do this, because now you don't have the back of the book. It's the same thing when you're trading. Well, how was I supposed to know that was going to happen? But did you look at the higher time frames? Oh no, I forgot. You know, I didn't prepare myself. That's exactly the point, is applying the information. As you become a more competent trader, as you gain more experience, the information that you apply becomes subconscious. I know my rules. I know I look at higher time frames. I know I look at the specific times of a candle. I know I look at specific hours of the day. I know I look at specific sessions. I know I look at specific pairs. I don't have to remind myself of that anymore. That's just an innate ability that I have, because I've created a routine for myself and I've applied the information that I know. I don't turn around and trade USD ZAR because somebody else is doing it. I don't care what it does. I don't know its habits. I don't know what the probabilities are. I don't know what it does. So therefore, that does not help me. So you as a trader, this is exactly what you have to do and how you have to work through things. So, you know, how do I become a great trader? And I mean, you know, everyone always asks this. This is the same thing people always ask about, is how do I become a great trader? Ask questions. Don't be afraid to ask questions. And this is the biggest thing people say is, you know, I'm afraid of looking stupid, or I'm afraid of making a mistake. You're in a safe environment. You're in an environment where everybody wants to succeed. So nobody's going to laugh at you because you asked a question. They're going to question you on your question, or they're going to try and give you information, but nobody's doing it in a way that they're trying to hurt you. They're trying to help you. And this is the biggest hurdle a lot of people have, is that ability just to go into a chat room and say, hey guys, I know fuck all. I need some help. Give yourself the opportunity. You're paying money to people. You're paying money for courses. Whatever you're doing, you're allotting time. You're using up your own resources, and you're wasting them by not doing that. And I always laugh at people when they come up to me, and it's funny because I always look at the chat room. I try and picture the chat room like a big table, like a big dinner table, and I always feel like I'm watching. What's that little movie with Timmy, where it's like, please sir, can I have some more? And it's, you know, I sit there and I laugh because people are coming up to me with like their hat in their hand, and like they're rubbing their feet together, or their head is down. Well, I don't want to bother you, Ted. Well, what do you think I'm here for? I'm here to help you. Rakil's here to help you. Everybody that you're working with are here to help you. You're not bothering somebody. You know, I've always said, if people message me, sometimes I might not be on my phone or on my computer. So, you know, you leave it there. I get the notification. I'll eventually get to it and I'll help you. Sometimes if I miss it, you message me again and say, Ted, you know, you forgot this question I asked you. Can you go through it? And I'll definitely get back to it. Like, we're human. We you know, we're working on multiple things. I have a lot of projects, but I don't ever expect somebody to say, hey, I don't want to bother you. You have to bother me because you want to progress. That's the sign of progression, that you're hungry to learn. When you ignore or you hide or you're sitting there and you know, you don't want to talk to anybody, and then you come to me and say, well, I just lost like 10 trades in a row. I can't help that. I can't help you do that, because essentially what you've done is you've taken it upon yourself to think that you can do it on your own, and then you come and complain to me when things aren't going that right. And it's the same thing what happens in Rakil's groups, anybody else's groups. So if you're going to be that type of trader, you're going to fail. You have to want to learn. You have to basically think of yourself walking through a crowded room naked. That's how you have to be when you're a trader. You have to basically be naked, hang your balls, hang your tits, hang everything out and say, listen, I just want to learn. I'm okay that my balls are small. I'm okay that my tits are too big. I'm okay with all this. I just want to learn. Can you help me? Because eventually I'll be able to have plastic surgery with all the money I make from Forex. I'll be able to resize my tits, grow bigger balls, you know, get a butt implant, whatever I need to do to make myself look better. But at this point, I'm willing to look like shit so that I can eventually progress and get better to where I need to be. And that is what you need to understand and really take to heart, is everybody's here to help you and you have to work at it. Dedicating your time. You know what? People say we don't have time to study. You don't have time. You know, read something as you're eating. When you wake up in the morning, you know, I used to, on my way to work, I used to read on the train. I would read like a couple of paragraphs. I would play a game, you know, guess the direction of the market. I would do things where I only had a few moments to work through. And at the same time, don't overdo it. You know, people turn around and say, okay, I'm going to go study for 2 weeks and I'll see you later. Your mind can't take that. You know, it's like going to the gym for 5 hours. Really? I see guys that are there for 2.5 hours, and it's like, what are you doing more than the other person is doing that's only there for 45 minutes or an hour? It's, you know what, they're busy talking, you're hanging out, they're resting too much. They're not really engaged in the workout. They're just there to socialize. So don't do that with Forex. You know what? Do it in spurts. Put yourself in a position where you're going to learn at the maximum or the best time to learn, and then take a break. You know what? Just learn and relax, and that will definitely help you as you go through. Sorry, just going through the chats. Okay. How to study. Okay. Same thing. Ask questions, write notes, ask questions about the notes that you're taking. You know what? Be active. And a lot of people, I find that maybe we didn't have great study habits in school, or maybe you're still in school and you know, you just want somebody to spoon feed you. You're not going to remember everything someone says to you. And that's the biggest thing. So sometimes you have to turn around and, you know, be active in that. You know, maybe Google a question before you ask the group, because that'll improve your critical thinking skills, and maybe you'll have more information that someone else couldn't give you. Or maybe you Google the question, then ask the question in the group and say, hey, I read this information, and, you know, do you guys believe this is correct? I read this somewhere. Not instead of saying, you know, what time does Asian Open start? Why don't you Google that and say, okay, you know what, I'm reading conflicting things. I see Asian Open opens at this time, but this one says this time. What is the right time? Is there a range? Like, what are we doing? You know, similar to that. And when you provide information, talk about what if session, like what if scenarios. You know, give ideas where there's progression, where we can start discussions. And that it will definitely help you as you progress. How not to study? You know, you jump into the chat room and just sit there and read. You stay quiet, or you just copy somebody else. You don't want to be in that position. You want to be active. You want to be part of something. The biggest or the best traders, what they have in common is they ask questions, they studied, they built a plan and a structure for them, and they didn't care what anybody else was doing. And I always laugh at people, and you know, like, it's the same thing on social media, is, you know, everyone starts yapping and they're so busy with everybody else, but the most profitable traders are sitting back doing everything every day, the same thing, and they're ignoring everybody. I don't care what everybody else is doing on social media. It's a joke. I use social media as a time for fun. I laugh at people because I see all this time everybody's wasting, and everyone's pointing fingers here, or talking about this analysis or saying this, and I'm sitting there laughing because I'm looking at them saying, how many of these people this morning actually profited in a trade, or actually took a trade and actually did something productive? And chances are it was none of them. None of them did that. And meanwhile, I'm just sitting there doing my gains. We do these daily webinars, as a group. We sit there and laugh. Everyone takes trades. Everyone's profitable. Everybody's earning. And then there's people out there that are so angry, that are, trying to talk bad about this person, trying to make this fake account. And I'm sitting there and I just laugh. And people ask me, they always say to me, Ted, does this bother you? I said, no, it doesn't bother me. I sort of feel sorry for people, because it's like, I'm sitting in my glass house and people are throwing stones at it. And it's like, you break my glass house, I just go buy a new one because I got lots of money. And when you look at stuff like that, and you examine what people are actually doing, it's like they're wasting so much time on other people that those other people don't even care about them. And then when you look at the best traders, they just sit there and laugh. They do their thing over and over and over again. And you need to become in that mindset, and you need to drill that in. And I'm not saying you can't have fun on social media. I'm not saying you can't engage in others, but make sure your priorities are there, that you're progressing before you're off doing it. It's sort of like when you're playing a sports, you're in a sport, right? And you practice for 2 hours, or you have a game for 2 hours. At the end of the game, yeah, of course you're going to go out and have a beer, or you're going to go out and have a drink, and you're going to celebrate with your team. It's the same thing with social media, I find. I'm busy working. When I'm done my work and I've got time, sure, I'll have a great chat with everybody. I'll debate for hours with people online because I've already done my work for the day. I've already succeeded in what I needed to do. I completed my tasks. I'm happy with my progress. So now I can have fun and I can do other things. Let's talk about institutions and sort of what they're doing to my account. Because everyone talks about this. Everybody wants to talk about institutions, and everyone is always like, oh, institutions do this, institutions do this, the market's manipulated, all this other stuff. And not a lot of people understand exactly what institutions are. Institutions, we group businesses, banks, governments, all institutions, because they move the market. The currency exchange market, Forex, is moved by economics, by businesses, by all these various items that are a lot bigger than us. And that's what you have to remember. So, people always ask me like, oh, why did this currency pair drop? Or why did this currency pair go up? You have to realize that banks, businesses, governments are all involved in that. So whenever there's a monetary policy from a government comes out, currencies switch. Bank rates change, currencies switch. Businesses have bad days, currencies switch. There are so many different ideas here. You have to understand what they're doing at a high level. You don't need to know the specifics, because if you dive into the specifics, you're going to spend hours as an economist and you're not going to get any work done. When you look at institutions, they're large whales. So in the gambling world, whales are people who spend lots of money, and they actually, they gamble heavy, they move big amounts of money in the casinos, and they can break the casinos. Similar to the trading world, they move in slow patterns. They're very methodical, and you just don't want to get caught in their way, because when you go against the trend and they're pushing hard, you're going to blow your account. And then people always turn around and say, and this is what I always enjoy hearing from people, well, if you're such a good trader and you're making 100% returns a month, why can't you go work in an institution and do that? It's quite simple. Institutions can't trade like retail traders because they're too large. You can't throw $1 billion into the market or $2 billion into the market and take a trade without the market moving. Okay? You can throw your 100, your 500, your 1,000, even your $1 million into the market, and you're probably not going to really move it too much. But when you get into the hundreds of millions, the billions, you're going to start having a little bit of an effect in the market and the way liquidity is shaped. They have different risk parameters. You're sitting in an office all day, go tell your boss to fuck off, right? They're going to kick you out of your job. You can tell the charts to fuck off all day because they're not going to bother you. You're working for yourself. They have too many rules. There's too many things in place to stop them from trading like us, from making abstract moves. They have to make moves that are in the benefit of the shareholders, benefit of senior leaders, benefit of management. And at the end of the day, they don't want to lose their job. So they have to make sure they take proper ideas and they're a little bit less risk adverse. So how do we take advantage of institutions? And, like sort of what Rakil said is, watch the patterns, stay away from the news, trade with the trend, and enter and exit trades when you feel comfortable. And I think Rakil touched on this a lot is, following what makes sense for you and understanding that will give you a greater opportunity to know what we want to do. How do institutions take advantage of us? I think this is something that's not really touched upon a lot. They know what we see, okay? Institutions are well aware that everyone uses candlesticks, okay? Institutions don't use candlesticks. They use price, they use volume. They don't have a chart in front of them with indicators. They don't have these patterns. They're looking at specific price levels, and this is what you have to understand, is you have to look at it and say, what do institutions know about retail traders? They know we are watching them. They know that, when the market opens today, people are going to try and take trades, because we see a particular level that we're going to go to. Institutions aren't going to let you get to that level until they're happy with what they're doing. So you have to be aware of that. You have to avoid their traps. And it's not really a trap. It's just common sense. I mean, when people laugh and they say, you buy support, sell resistance, it's exactly what you're supposed to be doing. And when people say, oh, like I sold support or I bought support and it went further down. Well, did you wait for comp firms to buy from support? Oh, no, I didn't look at that. It's just always, you just sort of buy support all the time. Or, I sold that resistance and it just kept going up. It's like, well, did you wait to see that we were moving? We tested resistance and broke? No. Institutions know that. Institutions know when we get at key price levels, everyone's going to be jumpy because they're going to say, oh, wow, gold's at like 1340. We're going to 1352, guys. And everyone's going to jump on the buy bandwagon. They're going to be like, no, we're not ready to go there yet. So we're going to drop it down to 1330, and then we're going to go up to 1352. You have to wait for confirmations. So when people say, oh, I just got stop hunted or I just got this, it's like more than likely you probably gone to the trade early, and you know what, you just got pushed the wrong way for a bit. And you know what, risk management states you have to leave the trade. It's not a big deal. So when you look at institutions, you got the us versus institutions. Now, when you look at this, do you see a problem? Look at us. We're just all these regular people, like we're all happy and stuff. Look at the institutions. They're well-groomed, oiled machines. These are things, they are not here to have fun. They're not here to be friendly. They're here to grab all your money. So when you turn around and you look and you say, man, I got to go after these institutions, you're going to end up trying to go after them, and you're going to see exactly what's happening in American Gladiators. You're going to be like, wow, I'm in a big load of shit. And, when you go and you finally win, you're like, yeah, we won the trade. We got out of the market. We were successful. Okay, so how do we do that? We know institutions can't make 30% like us a day. They have huge orders to put in and take out of the market. And the reason why you say, like you see the market range for periods of times is because they're putting orders into the market or they're taking orders out. They can't afford to move the market yet. And institutions hold positions a little bit longer than one day, maybe a week. And that's where you'll see consolidation on the higher time frames for such a long time. And then we break out. But keep in mind, institutions have thousands of people working for them. A lot of times, we see news releases, and then people say to me, they'll say, well, Ted, how come the news was positive for the US dollar, but it went the other way? It's because they've already worked into the math. They've already done all the analysis. They've done all the work that the government is going to put out. They've done all the calculations. They've run all the scenarios, and they've said basically if it's in between this variance and that variance, there's no real change. This was expected. Institutions will only move the market with price when the actual dollar, or the the actual news event, that actual idea was unexpected. That's what you have to come to terms with when trading the news. And that's the reason why I tell people, sort of stay away from the news. And everyone posts on social media, oh, look how easy the news trade was, look how easy this was, or like news was negative, so of course it was going to go up. We don't know that. We don't know exactly why institutions are going to do what they do, but we do know the market's going to move in a direction based on what the institutions believed the news event would happen with the actual currency pair. So a lot of times price is already reacted to the news event, and the news event happens, that's just the end of price moving. So you know what, the only time you're going to get an actual big movement is when it's a large news release, or there's a big discrepancy when you actually have the actual versus a forecasted, and the institutions were way off. That's where we get the information, because at the end of the day, institutions want the best price, and they can always move price to get to where they need to get to. So keep that in mind. So